So, I grew up a rich kid. I grew up in a very privileged family, and even, in fact, my family had businesses over several states. We had a company plane, we had maids, and my grandfather had a chauffeur, and all that was great up until the age of 12, because it was at the age of 12 that we lost everything that we owned. It was at the age of 12 that I learned where money comes from. It was at the age of 12 that I went to work. I went to work cleaning horse stalls for 10 hours a day, for 8 hours a day, for eight hours a day for $10 a day pay. And I used to take that money from cleaning those horse stalls, and I would go home and invest them in used bicycles. And then I would take those bicycles apart and sand and paint the frames and mix and match and create better bicycles, and I would sell them to kids in my neighborhood. In fact, I even had a miniature leasing program going at one time, and when they couldn't pay the bill, I would repossess the bicycle and redeploy the bicycle to a new paying client. So you see, I've been an entrepreneur my entire life. Or at some points I would even say I was a wantrepreneur, not an entrepreneur. So life changed a little bit, and my high school years were different than those younger years as I began to work more and more. I worked my way through high school. I worked in a fast food restaurant. I worked assembling swing sets and boxing layaways at a local toy store, assembled bicycles, if you can believe that or not. And I did what I needed to do to help my family get by and to help get me out of school. So when I was in my late 20s, this was following a career in my early 20s in the truck rental and leasing business, which there are several people in this association that I know. I've seen them this morning from my days working for Rollins Truck Leasing and Ryder Truck Leasing. And through those days I learned sales, I learned how to take care of customers, I learned how to collect money, I learned how to have my butt chewed out by an angry customer, and how to try to make them happy, and I learned that the customer was always right. And so that led me into my late 20s. I got tired and restless, and the entrepreneur in me decided that I wanted to start a business. So I started a truck equipment and repair shop. So we built flatbed truck bodies and cut trucks in half, extended the frames, made dump trucks out of tractors. We painted trucks. We did trailer repair. We did road service. I learned to weld. The one thing I learned when I was 12 is that I hate manual labor, and I vowed that I was never going to do that again. So it was a big deal for me to learn how to weld and to do some of these things. But the one thing that I learned, the biggest thing that I learned from this business, is I learned how to fail. Because after 3 years, I had about $2 million in revenue. I had 20-something employees. I knew how to sell. I knew how to be a wantrepreneur, but I didn't know how to manage what I had. And as a result of that, I failed miserably. And this failure taught me a lot about life. This was probably the worst thing that's ever happened to me, even including watching my father wither away with cancer. But you see, there was a blessing in that failure. And that was at the age of 30. That was 19 years ago. That led me on a journey. That led me on a spiritual journey. You see, I wasn't a member of a church, but I started going to church because I didn't know what else to do. Everything I tried was a failure. So I woke up one morning, I looked at my wife, and I said, "Come on, honey, we're going to church." And she looked at me like I had a horn growing out of my head. But we went to church, and that led me down a path of starting a Sunday school class It led me into a path of youth ministry. It led me into prison ministry inside Angola State Penitentiary. It led me into a paid ministry position for a period of time as a youth director. What was I thinking? But most recently, the most meaningful thing that I do is I am deeply involved with a group of 10 men on death row at Louisiana State Penitentiary for the last 18 months, helping them on their spiritual journey as they live every day in an 8x10 cell in the darkest place in Louisiana. See, what I've discovered is that I have a tremendous passion for the human spirit. Back in 2016 in Louisiana, there was some horrible flooding. Me and two guys from Morgan City started a nonprofit called the Cajun Army, which now has 18,000 members, that brings hope to people affected by natural disasters. This deep passion for the human spirit is what makes me tick, and that's why I'm here today. 6 years ago, we formed this company, Next Level Solutions, with one mission in mind, and that mission was to help companies and to help people and leave them better than we found them. So that's why I'm here today, is to leave you better than I found you. My purpose here is to truly inspire you to take a look at yourself, your leadership style, your organization, and hopefully inspire you to impact everyone affected by your business. If I can inspire you to start down a steady, long-term path of improvement, I've brought you the most value that I can potentially bring you today. Today is an invitation to play the long game. I want to talk a little bit about small businesses now. In my time doing what I do, over the last several years, I've been in and out of hundreds of small businesses. The U.S. Census Bureau calls a small business anything with 500 or fewer employees. My definition of a small business is really that 0 to 50 million range, because beyond that, they're just not really small. They take a lot to run. 80 to 85% of these businesses that I'm in and out of are an administrative train wreck. It's my observation. 8 out of 10. They serve customers well. They send invoices. They receive payments. They make deposits. They make payroll. They pay their bills. They function. They continue year to year. But none of them are very sophisticated. In fact, most of them don't even have an accurate financial statement or an accurate set of financial statements at the end of the month, or even know how to ensure their accuracy. You see, many of these have strong CPA relationships, which is something very common that we see. They have a CPA and a bookkeeper, and usually what this means is they don't have any idea on a month-to-month basis what their true performance is, nor are they using that data to strategically manage their business. Now you see, I have a tremendous respect for CPAs. I have 2 of them on staff. They're very smart people. But most of them, if you really learn their stories, not all of them, but most of them have never run a business. You see, you all know more about running businesses than CPAs do. They know GAAP accounting and they know tax laws, but they don't know what it's like to walk a mile in your shoes. The big question today is, how much more profitable could small businesses be if they really stepped up their game? If they really knew these things and they really used the data and they made strategic decisions, how much more profitable could they be? So in my early days, I mentioned that I worked for Penske Truck Leasing. That's a General Electric company. So I've had, and I work for Ryder, that's a Fortune 500 company. So I've had the opportunity to work for these big companies, and it's very interesting how good they are at measuring their performance. They've got sales metrics, they've got mechanical metrics, financially, they know exactly where they are, and everything is driven by a Lean Six Sigma thought process in Penske Truck Leasing, which is a GE-owned company. So with that in mind, let's transition and talk a little bit about some statistics that were fascinating to me when I heard them. Over 99% of the 28.7 million firms in the United States are small businesses. Now, this is published by the U.S. Census Bureau in 2014. And keep in mind, this is defined businesses with employees of 500 or fewer. Only 20% of that 99% actually employs people. Now, this is the one that shocks me. It violates the Pareto Principle. Who knows what the Pareto Principle is? I bet you don't know it by that name, but I know you know what the 80-20 rule is, right? Everybody knows the 80-20 rule. If you got employees, you know that 80% of the work's done by 20% of your people, and 20% of 80% of the problems are caused by 20% of the issues. Everybody knows what the Pareto Principle is, whether they talk about it or not. But this is fascinating. 99% of the firms are small businesses, and they produce only 44% of the GDP in our country. So that means that 1% of the companies generate 56% of the gross domestic product in our country. Why do you suppose that is? Anybody got any ideas? Could it be discipline, patience, business acumen, consistency? Those are some of my thoughts. Metrics. They run their businesses differently than those 99% of small businesses do. Imagine if small businesses started firing on all cylinders like the big boys do. What if small businesses really realized the power they had to impact their team members, their employees, their communities, and the United States economy? What if we all started firing on all cylinders like that? Now, I realize that not everybody is an A player. There are A players, B players, and C players. We all have them that work for us. But what if the A players emerged out of that 99% and started carrying more of the weight than 44% of the United States economic activity? Now, I'm going to transition, talk a little bit about a book that I read many years ago, and it's a fantastic book. Who has read the book Good to Great, or heard of the book Good to Great by Jim Collins? Okay, good. We got some people here that have read the book. In the book Good to Great, I'm going to roam a little bit. Is that okay? Not down there, don't get worried. So in the book Good to Great, Jim Collins talks about something called the Flywheel Principle. And walking into these small businesses, if you can picture, this is what it's like, the ones that are performing poorly. Picture that table being a concrete and steel table on a spindle, and it's 10 times the size that it is right now, and it weighs 10,000 pounds. And it's spinning in the wrong direction, 90 miles an hour. To affect change in an organization, the first thing you have to do is you have to say, oh, damn, that thing's spinning in the wrong direction. I need to stop it. So what do you suppose happens when you go to stop that from spinning in the wrong direction? It's going to take some energy. You're going to throw some chairs at it. You might run and bump into it and break your shoulder, but eventually you got to do what you got to do to stop the momentum of that. It may take 2 years to stop the momentum of that thing spinning in the wrong direction. But you got to stop it. Once you stop it, now you got to start pushing it in the right direction, and it weighs 2,000 pounds. So that means you got to get all your buddies with you. You got to grab on. You got to start slowly spinning it. But what happens is it starts spinning in the right direction. It gets faster and faster, and you don't have to push as hard because it starts pushing itself. And so that's the dynamic that really speaks to me about what I see in these small businesses. Now, it all begins with leadership. That's where it starts. Now, I don't want to talk about the entire book here, but I do want to briefly run through this because you know these concepts. The first one is level 5 leadership. That means it starts with the owner or the leader or leaders. And then the second part, I know everybody's heard of getting the right people on the bus and then the right people in the right seats on the bus. It's almost cliche in our culture today in business in America. But you got to do that. And you've got to confront the brutal facts. You've got to be willing to look at yourself and look at your team members and really take account of what the issues are. And you have to face them and make a decision if you want to do something about it. The next one fascinates me, the hedgehog concept. You see, the hedgehog is a spiny little animal, an ugly little thing, but he does one thing in the world better than any other animal in the animal kingdom does. The hedgehog defends himself. When he senses danger, see, his spines don't eject like a porcupine. They stay in a defensive posture. That hedgehog is the best in the world at balling up like a ball and sticking those spines out to protect himself. And so the companies in this book that Jim Collins studied that experienced this growth, the similarities in them, all had defined their hedgehog concept. Next Level Solutions has developed our hedgehog concept. It's about helping companies and helping people. That's it. That's truly what we're interested in doing. And then finally, discipline and technology. And that breakthrough arrow is what happens when that wheel starts spinning in the right direction and you really, really get momentum. So, while we're talking about firing on all cylinders, one of the things that we need to realize when we're firing on all cylinders is what are the cylinders, right? I mean, we have to know. They have to be known to us, and it's pretty simple. When we started Next Level Solutions, we joked around and said we reinvented the wheel, but in reality, we didn't reinvent anything because it's the same in every business. No matter what your business is, it revolves around that axle, which is what you do. Now, not everybody here is a trucking company. We've got EFS in here. I see Jeff. I don't know. Raise your hand if you're not a trucking company. Okay, there you go. So a lot of you aren't trucking companies. Whatever it is you do, your widget goes in the center. The center section of this wheel is the day-to-day activity that it takes to run your business. And this is truly how they run. I know we've all heard the cliche of working on your business and working in your business, but this is the stuff that happens that keeps you from doing a project. And it starts with the executive area. And we don't have the time to dig into each one of these, but businesses are complex and complicated, and every single one of these categories we could talk for 2 hours about why it's important and what to do with it and where to start. But obviously it starts with the executive area. You've got your HR, your human capital, your operations, the way you dispatch and manage your trucks, or the way that you process your sales, or the way that you manage your client engagements. Marketing and sales, what's our strategy? How do we get customers? How do we want to appear in the marketplace? What is our branding? What is our sales process? How does that turn into money in the bank? What's our cash conversion cycle? Information technology, and finance and accounting. And then finally, this area is the tire, or the air in the tire. So just like what happens with one of your trucks if you send it out and you don't have enough air in the tire? Got problems, right? What happens if you send a truck out and you got too much air in the tire? You got a problem. This working on your business activity is just as important as having the proper tire pressure in your tires on your tractor trailers. Now, we've said that all of these are important, but I'm not here to talk to you about all of them today. I've picked one, and it's finance and accounting. Because number one, it's one of the primary areas that people struggle in small business. And if you don't have track of your money and you know where your resources are, number one, you're not being a good steward of what you've been blessed with. Number two, you're not going to be in business very long. And I know this from experience, because I failed for this very reason. So it's pretty simple. Now there's a certain order that we recommend you do things when it comes to finance and accounting, and it's much like sitting in the cab of that truck. The first thing is that rear view mirror. What just happened? So if you don't have financials, that's the first step, is to be by the 10th or the 15th of every month having accurate financial statements. Not just looking at a P&L, because anybody can do 6th grade math. But I mean really looking at an accurate set of financials. That means understanding the balance sheet. That means understanding what those accounts are, because if that's not right, none of it's right. What just happened? Once we have that under control and we can crawl, then we can begin to try to stand, and we can start looking at what is happening. Dashboards, those are your metrics. Now, could you have metrics before you have monthly financials? Sure. You can also build a house and frame it up, put up walls and put the carpet in before you sheetrock and texture and paint. You can do it. I don't recommend it, because you haven't built your house in the proper order and built a solid foundation and built the disciplines required to live this way. Finally, what's going to happen? That's the windshield. As we look out the windshield and we begin to plan into the future. And you might say, well, Chris, you should be planning all the time. You should be. I'm just proposing to you that if you don't know what happened last month, how can you plan for the future? How do you plan who has what budget when you don't even know what they spent last month? So that kind of frames this discussion for us. Now, I want to pause before we dig further into this financial process. And I want to talk about why there are building blocks and why I'm talking about the power of focus, this focusing on one thing at a time. I love this analogy of the 600-pound person. You have a 600-pound person, they wake up in the morning and they say, I got a great idea, I'm going to run a marathon. Good luck with that. That does not happen overnight. And trust me, this analogy speaks to me because you're looking at a guy who's wearing pants that are 2 inches bigger than they were 5 months ago. My weight is going to fluctuate 20 to 30 pounds in a given 5 or 6 month period of time because I understand this battle. You have to change your lifestyle. There's small decisions you have to make. You've got to decide that you want to do it, and you have to make small changes over time. You have to quit eating fried chicken. You got to quit eating French fries. You got to give up the beer and the wine for a little while, the desserts. You got to get up every morning and start waddling. And you know, you might lose 50 or 100 pounds, but guess what? Then you're a 500-pound person. So, but this is a process, and it takes time. And I'm telling you this because this journey is not an easy one. The second thing that I want to talk to you about is businesses and business owners. You see, Entrepreneurs are some of the weirdest people I've ever met. I've met a bunch of them. I'm one of them. We are some quirky, interesting people. We think we're the smartest person in the room. Every one of us. All of us. We know better than everybody else. And a lot of that is for good reason, because a lot of us have managed to provide very well for our families. And so, but I want to challenge you today to realize that we all have our limitations. You see, my big limitation is my anger. I'm a super nice guy, but I have an anger problem. I have to know that about myself. So when somebody comes in my office and they're complaining to me and they're saying things that are really getting my raw spots, I can't cuss them out and throw them out of the room. And I can't do that, not if I want to grow a team. See, there's a term in accounting called tone at the top. And we'll talk a little bit more about that specific definition later. But that tone at the top and your DNA as a leader is going to permeate through your entire organization. You can do it right now. You can look at your company and you can see some of the dysfunctions that exist in your company because of the tone at the top. And I'm not saying that to be insulting. I'm not saying that to be harsh or to be critical, because I'm a small business too. I got the same problem. But step one to solving a problem is realizing that you have a problem. So once we realize we have a problem, we have to focus on one thing at a time. The process, the past, the present, the future. Are anybody in here familiar with Dave Ramsey? Dave Ramsey fans? I'm a Dave Ramsey freak. I love the dude. I love the message. Dave Ramsey, for those of you that don't know Dave Ramsey, talks about the baby steps. He has a process for building personal wealth. And I'm not going to go through the baby steps, but it's in the book, The Total Money Makeover. I highly recommend it. It changed my life. It changed my marriage. But he talks about the power of focus in his book. And he adamantly defends his process. The process. It's all about doing things in the proper order. So, in order to follow the process, you have to know the process, right? You've got to know which kinds of things are important. So, the next slide, I'm going to talk a little bit about that process, and I'm going to focus on the rearview mirror. Now, I will tell you that I'm going to speak to this group of people like you know nothing about accounting. So if you are an accounting expert and you understand this process, now's a great interested. And remember, I pledged at the beginning of this talk that I was going to do my best not to bore you to death. So hopefully I don't see anybody sleeping yet. And nobody's walked out except for one guy to use the bathroom, I hope. All right, so we're going to talk about the process to get to that rearview mirror. So this is a process we follow when we go into a business, and it's kind of, I've had to learn this the hard way. And John Austin is a client of mine, and he can attest to how frustrating this can be sometimes when you're trying to follow the process, because remember, everybody wants to put the walls up and paint before they want to do things out of order, and I am a person that is driven by order. The first thing that we do, and that I would encourage you to do, is take a look at your business, and hopefully nobody here has any compliance issues. I know in the trucking business we've got DOT compliance, we've got federal income taxes for business owners, whether you're a pass-through or whether your company pays you're a C Corp and your company pays its own federal taxes, your state withholdings, your sales taxes. I know most trucking companies don't do sales taxes, but some of you may have side businesses attached to that where you charge sales tax. You cannot hold that money and not pay it to the government when you took it on their behalf. That's called stealing. Just going to throw that out there. That is not acceptable money to be using for payroll. So that's the first thing we're going to look at. Government compliance. We're going to make sure that we've got our ducks in a row. We're taking that money that we've been trusted as fiduciaries with, and we're going to give it to the rightful owner on time when we're supposed to give it to them. And that's going to, for a lot of times, that's a huge step. Because sometimes you're so far behind the 8 ball, and I've been there. I've been there where it was so far behind the 8 ball that I couldn't catch up. The second thing we do is we recognize the entity concept. It's one of the basic principles in accounting. Business is business and personal is personal. If you're running around paying for your company truck note with your personal bank account or using your personal credit card and you're not turning your receipts in to accounting, you're not doing yourself any favors, because it's almost impossible to prepare a set of business financials if you don't have some sort of control on the data. So that's usually a pretty easy one. Well, I say it's pretty easy. Remember I said businesses and business owners, sometimes that is the trickiest hurdle to overcome. But as long as you have somebody that wants to change and they've made that decision, that's an easy step. Now the third one can take a long time, depending on how big the company is. And so what this step is we're reconciling our spending accounts. Now what we're ensuring when we do this is we're making sure that we know that we're running only business expenses through the business accounts. And so when we reconcile these accounts, and some companies, if you're big enough, on a daily basis, some of you weekly, monthly is fine, but we rarely reconcile anything less than weekly with any of our clients. When you do this, you are ensuring that all of your data is in your accounting system. It may not be in the right place, but it's all in there. And if it's all in there and everything's accounted for, you can work with that. So once we're completely reconciled and current here, the next thing we're going to do is we're going to go down that balance sheet. Now the balance sheet, and remember I told you I was going to talk to you like nobody knows anything about accounting. The balance sheet, very simply stated, this is nothing like you heard in college, if you took accounting in college. The balance sheet's real simple. It's the crap I have, the crap I owe, and what I got left over. Assets, liabilities, and equity. Now you can get a lot more complicated than that. There are contra assets, and you've got prepaid expense amortizations and equity contributions and all sorts of things that accountants can do to make it complicated, but it's real simple. It's what you have, what you owe, and what's left over. That balance sheet is a snapshot in time. It's a picture today. And so when I look at that and I audit that balance sheet, I should be able to go pull a piece of paper that justifies every balance on there. That means if I've got a liability for a credit card bill and it's a negative number, that's a red flag. What, did I overpay my credit card? Did I pay them too much? Well, number one, if you did pay them too much, then you need help. But these are simple things that you can see in looking to see if your balance sheet is correct. Now, once that balance sheet is accurate, we know everything's in the system. We know the balance sheet's accurate. That means every dollar in your system is somewhere on that P&L. May not be in the right spot, but your bottom line is right on that P&L. At least you know your profitability number at that point. That's when we then dig into this P&L and we look at structuring your chart of accounts in a way that provides you with data that you can actually make decisions on. So your direct expenses are expenses that occur when you sell something. It's like a water faucet. Sales turns on, there goes the direct expenses. You quit selling stuff, those don't exist. Now in the trucking business, there's some interesting things that you could debate whether they go there or whether they're fixed expenses, but it's really just a matter of you being engaged as an owner and making those decisions. Your fixed expenses, the things that you're going to pay regardless of anything, and then your other expenses. Now once you've worked through this entire P&L, you're now in a position every month to close the month by the 15th of the following month and produce an accurate financial statement. This process, I've seen it take 90 days, I've seen it take 30 days, I've seen it take 2 years. Depends on what kind of situation you're in. So, once the rearview mirror is gone, what comes next? dashboard, right? How appropriate. Tractor dashboard, got lots of gauges and dials. So what are the things that you want to look at in the transportation business on a day-to-day basis? You all know I am not telling you anything you don't know right here. I'm just sharing this with you to tie it together. Number one, that I understand your industry. Number two, that if you're not monitoring these things on a weekly basis, or you don't have your thumb on them and you're not extremely intentional about them, this is where all your profit goes in the transportation business. Now, that's not a statement that I'm making lightheartedly. That's a statement that I'm making after spending 20 plus years around trucking companies and in this business myself and observing it and watching it. Seems simple, right? How do you gauge and manage fuel cost? You create awareness around it, and I'm going to talk a little bit later about Mesilla Valley Transportation. Who's familiar with their fuel economy program? Mesilla Valley, when it comes to fuel cost. But the culture in the organization of showing the information, who got the best price per gallon, who had the best miles per gallon, who gets the $50 gift card for dinner with their family because they did such a great job, and having all those guys and ladies driving trucks wanting that recognition and that appreciation to move forward. This is a great dashboard item, and there are a lot of challenges to setting it up, but it's really pretty simple once you are organized and you have the right data. Now, if you're not a trucking company, these areas, when you can figure out how to help trucking companies save money in these areas, you're doing them a big favor. The second one is insurance costs. Well, you might ask, well, what do you do with insurance costs? It's just going to go up, right? I mean, like 5 of you already thought that as soon as I put insurance costs up there. But there are things you can do. You could be diligent with your relationships. You can, from an executive perspective, you can make some decisions on risk transference and your deductible management. You could assume a little bit more risk yourself. You could look if your declared values on physical damage are based on a percentage. You could declare a little bit lower values because they're not going to pay you but what they're worth anyway when the accident occurs. And how much of that risk could you accept yourself? There are a lot of things you could do about insurance costs. When I was a CFO many, many years ago at Bengal, this exercise used to take me 2 weeks when we renewed our insurance. I would comb through everything I could possibly milk out of it. Tire cost, curb tires, not enough air, too much air, road failures. Everybody knows a road failure is expensive, but these are things that when they occur, we should be making a big deal out of it and communicating it to people and making it taboo when it happens and patting people on the back when it goes well. Physical damage. How do you fix physical damage? You fix it with culture. You fix it with safety programs. Bad debt, that's in every business. Driver wages, overtime, your driver productivity. So once we have the dashboard down, we move on to the windshield. How do we plan and maximize our performance? Now, this flywheel is spinning fast now. It's beginning to really spin in the right direction because we're looking at our financials every month. We've produced some valuable dashboards, and now we can actually sit down and take that data and use it to project because we actually know what happened and we know that it's accurate. Now, what happens a lot of times, are there any tinkerers in the room? Any of you like to tinker with the chart of accounts? Oh, we need an account for this now. Well, we need to move this out of this account. We need to start putting it over here. Data consistency is an enemy of accurate financial reporting. You should take the time and really spend the time and invest the time on developing your chart of accounts very intentionally. It doesn't take that long, but it is the heart of this entire process. And when it's done, You always have an other in every category, and if too much gets in the other, well, then you can add it, that account. But you should protect that chart of accounts and protect that data consistency, because that's what's given your finance people the ability to give you accurate information. Once we plan like this and we can actually set budgets, now we can take lines on our P&L and we can make people accountable for that line. Wouldn't it be nice to hand one of your employees 4 line items on the P&L that every month you could actually give them the detail of those accounts that they've managed, that they've set a budget for, and they're managing it and not you, and they're accountable for it. When you do that, you know, accounting makes mistakes, right? Stuff gets coded in the wrong spot. When you're doing this kind of stuff, now you're really humming, because everybody's got eyes are on it, everybody's looking at it. You can set these departmental goals and budgets and so forth. So once we're through this entire process, this thing is humming. That's really when we get to that point where this thing's spinning in the right direction. You have developed that culture of discipline, and you're using your technology to extract data and to manage your business. But just remember, it takes time, discipline, and consistency, and it all starts with you. Level 5 leadership. Level 5 leaders are people that have an indomitable will, and they are more concerned with the cause, not themselves. They're incredibly ambitious, but their ambition is first and foremost for the cause and for the organization and for its purpose, not for themselves. So, as I close, it all starts with you. Your DNA is the company's DNA, so you get to decide. And if you wake up and you weigh 600 pounds, it's not going to happen overnight, but you got to decide. Tone at the top. Commitment to openness, honesty, integrity, and ethical behavior set by management and trickles down. It is believed to help prevent theft, fraud, and other unethical practices. If you as a business owner or a leader don't realize the impact that you have on all of your employees and all of your business, the businesses around you and your community, you should take note of that. The second thing as a leader is that your employees know more than you think. I cannot tell you how many times I've gone into a company and we've been paid to help them, and I've sat down and talked with their people and they give us 75% of the answers we need to know how to fix their stuff. It all starts with you and your ability to lead people and guide them to productivity. You have to decide that. In my business, I made the decision a long time ago, I'm playing the long game. Would you join me? Thank you for your time. And if anybody has if you want to just run out of here and go get mimosas, feel free to. But if anybody has any questions, I'm happy to answer any questions. If not, I thank you for not falling asleep, most of you.
Multi-billion-dollar corporation, you need to read Good to Great. It is a fantastic book. But as you're going through it, I was looking at the graphic that you showed, and that first two, then what, and then right behind that is confront the brutal facts. And one of the biggest struggles that I see in companies that I go to work with as a consultant is they just have difficulty with confront the brutal facts. If you get them to focus on first two, then what, which is, do you have the right people on your bus, and are they in the right seats? And if the answer to either one of those questions is no, they have difficulty making a decision to either move somebody out of a job that they're not good at and put them in a job that they're better at, which improves the overall dynamic of the organization and efficiency. But the worst one is, if you've got somebody, if you can look at a person that works for you and say, if I knew the day I hired that person what I know about them today, would I have made that hiring decision? If the answer is no, you got to confront the brutal facts. You got to stop the bus, open the doors, and invite them to go get on somebody else's bus. And I see companies struggle with that all the time. Right? And the worst is when you get into companies that like to hire family members. Look, I know it's small business. I've hired my son-in-law. I had my daughter working for me. It worked out, but it doesn't always work out.
Yeah, I have one client that the father and the daughter work together, and ironically, it's one of these breakthrough companies, and they have no problems. But I know plenty of others that are as dysfunctional. You look up dysfunction in the dictionary, and they're all their pictures looking at you. To your point, oh, I'm sorry, you were going to say something?
What do you think of the Peter Principle?
Tell me about the Peter Principle.
Familiar with it?
Not familiar with it.
Peter Principle simply says that a person will be promoted to their level of
Oh, okay. Much like the Pareto Principle. I knew that one, but I didn't know what it was called. Yeah. So the line that said businesses and business owners that I had in my presentation was exactly geared toward that. People succeed to a level of their own incompetence.
But we don't bump them down as press one agreements in America. We don't do that. We leave them there so they function at a level where they can't function until they retire, and everybody's principle.
Yeah.
The best thing you can do is to mow them, show them the door.
Well, I can tell you this. The 1% that produces 56% of the GDP probably doesn't do that. But they also probably aren't as friendly of a culture. You know, you're a number and so
I am curious about how you view something. You presented some great information. Basically, businesses are built in two spheres, the HR sphere and the operational sphere. What is your opinion about what's more important to focus on? People in the right jobs doing the right work for their capacity, or making sure that your processes are all lined up nicely?
So that's a great question. What's more important, HR or processes in operation, right? And I'm going backwards here because if you remember this, well, let me get, I think it's this one, yeah. If you remember this slide, these are all the cylinders. And that's, you know, if this stuff was easy, everybody would be doing it, right? Everybody wants to own their own business. That's why 99% of the companies in America are small businesses, because everybody wants it. Not everybody can do it. So my opinion is that they're equally important. And if that is a problem of yours, which one do you fix first? Well, you got to have the right people on the bus and in the right seats on the bus. And if you don't have that, you can't begin to work on your operations. So does that answer your question?
Yeah, I mean, that's another thing I see pretty regularly is, you know, people say, well, if I hire the right people, the processes will work fine. No, they won't. They'll work however you built them. Great people and a horrible process doesn't equal a great business.
Right.
Great processes full of horrible people trying to run them doesn't equal a great business.
You know, back to talking about business owners that you give advice to and they don't take it. I have this theory. It's really kind of sad because what we do, we try to do it in a way that's very affordable, because small businesses are the most underserved segment of the market. I mean, if you look at these big business solutions and the knowledge and the consultants, they're expensive. And that's one of the primary things that we try to do, is to make that affordable. Sometimes I feel like we don't charge enough for people to respect our opinion. You know, wait, if I charged you more, would you then listen to me? So I do see that dynamic. Anybody else? I like the I didn't know it was called the Peter Principle, though. That's good. Peter and Pareto. See, I taught y'all something, y'all taught me something. All right, John Austin. Okay, well, y'all have a great day. Thank you for listening and for allowing me to speak. Thank you.